Hi, Facebook. Welcome to the Twin Cities Real Estate Show. We're going to be getting into some mortgage shopping, and I love Facebook. They're always updating stuff, getting things popping up here. We're going to be getting into mortgage shopping and tips and updates as to some of the changes that 2020 has brought us. So get out that 2020 bingo card, and we'll get into some of those. No, there's been some real positive changes here over the last month and a half. Excited to get into. So we're going to start the show, as always. If you have any questions, put them into the comments, and we'll try to get to them during the breaks. Again, we're doing our new 2-show, so total of 4 segments. So, yeah, put those questions out there. Happy to help answer those. If we don't get to anything, always stick around for the kind of like after show. If we have anything, we're going to try to wrap up. All right. See here. Oh, all these boxes. There we go.
We already have a lot of questions.
Oh, we're having trouble playing this video. Let's see. Did I lose something? Well, I think it's working. If it's not, we'll try to take a look. Just says having trouble playing video.
Okay.
Stream preview. All right, let's do this.
Gotta love technology, Hunker.
Uh-huh. You know what I'm going to do? I'm just going to check something here. Here we go. The excitement that is live streaming.
Oh.
Yeah.
Looks fine, huh?
Seems to be going. So.
Cool.
All right. Let's go here. Are you thinking of buying or selling a house, or just want to know what might be going on with one of your biggest investments? Then come hang out with us for a little while. Hi, I'm Kirk Duckwall, and welcome to the Twin Cities Real Estate Show, sponsored by Bricks Real Estate, Network Title, Eric Bloomstrand, Chad Preby with Bell Bank Mortgage, and James Tolson with Country Financial. If you have any questions for us, you can give us a call during or after the show at 651-303-0019. Again, 651-303-0019. You can also check us out anytime at brickstwincities.com, where you'll find the latest and greatest searching and researching tools. If you want to watch us on YouTube as well, just search Bricks Real Estate, and you can find our YouTube channel with all of our past shows on there also. Make sure you follow us on Facebook. Yep, you can watch us record live shows most Tuesdays around the noon hour. Actually, well, recently it's been every few Tuesdays around the noon hour. And then we have today when we're recording on Friday. But, yeah, check it out there. We also have our live, our shows that we do record live on there, record of past stuff, but also posting of upcoming events that we have and other things that we're doing. Recently, Bricks just did a big charity auction event that was really fun. Raised a lot of money for local charities and was able to give back to the community, especially to small businesses that have been having such a hard time recently.
Very cool.
So, all right, today we're going to be talking about mortgage shopping, some tips that people can use to try to save some big money out there and hopefully find the program that's right for them, not necessarily right for the bank that they're going to.
Right.
Also covering kind of a breakdown of some of the changes that we've seen. So, yeah, we're going to get into talking about conventional loans, FHA loans, VA, MHFA. There's a great new program, LIFT program, that's out there, and talking about pros and cons of each of those. But let's kind of touch first, Chad, on what things we have seen that 2020 has brought us as far as changes in the mortgage industry and mortgage shopping and availability. Because, I mean, it's back in April, it felt like things were really tightening up a lot.
Right. Yeah. Yeah. Thanks, Kirk. Good question. I mean, there's been a lot going on in the lending industry due to COVID, as we all know. Back in April, the floodgates opened. Rates dropped to historic lows. Refinancing was, record numbers and people wanting to refinance. The investors, everything was overloaded. Everything was backlogged, appraisals, titles. And at that point, we saw some of the banks and lenders increasing their interest rates to slow down the business to keep that service, level at a good standard. But, since then, we're all dealing with COVID. It's all new to us. During that time, the investors actually tightened up some of the lending guidelines with lending. So credit score increases.
What did they jump? They jumped from 620 up to, was it 6?
At Bell, we were a 660.
660, yeah.
Yeah. So, we went from a 620 to a 660. And that makes it hard for certain people, and it just puts a little extra stress on the market. But, they do things for a reason. Again, no one really knew the impact of COVID at that time and what that would do. So, in my mind, your mind starts racing. What is going to happen? Are we going to have a mortgage crash, or what's going on? Is the economy going to crash? There's just a lot of things that, a lot of uncertainty.
Well, I remember those conversations,
Yeah.
Talking with other owners about what would the market do? The questions of, is there going to be a lot of foreclosures?
Right.
And, I'm a numbers guy, and I follow, and I had confidence that we weren't going to see that, based on the impacts that I was seeing, and I'm glad it panned out that way, and also that we ended up with a really strong market this year. Now, I would have actually loved to see more listings than we've had. It did make it very tough for buyers out there. And we'll get into kind of where we see things going in our market segment, but
it was interesting to watch the uncertainty in the market and how the rates were changing at early on in the COVID. Back in April and May, it was like an EKG machine. They were going up and down.
Well, I remember talking to you about that.
Yeah, and it was
like, oh, don't worry, I know it was a bad day, but
yeah, and it's stressful, because you try to guide your clients to do the best thing, and you quote an interest rate, 1 hour, and the next hour is different, or next minute, so it was stressful for everybody, but ultimately you have to put your trust into your lender. And, they should be the people that are up to date on the market, what the market's doing, because
3.29 March 5th, 3.65 by like a week later.
Yeah. Yeah, literally. I know.
Yeah.
I was quoting in the low threes, and it jumped up to over 3.5 overnight. And that's not always an easy conversation to have with your client is, why did my rate that you talked to me about yesterday go up 0.5%? Not easy to answer, right? Because we're in this market, this vulnerability and uncertainty in the market due to the COVID. Good thing about COVID, though, guys, is that it's kept our interest rates down.
We're real low.
Really low. I mean, we're at a historic low today where we've never seen interest rates like this, the history of our country. So this is amazing.
Well, one of the things that you listen to shows from a few years back, and I was paying more attention to single premium buyouts than I was interest rate movement, right?
Yeah.
It was just like you can save more money there than anywhere else. Well, I'm changing my tone with looking at interest rates that have dropped by 25% over a year ago. And somebody's, I actually got in this conversation the other day with the guy who delivers our mail, and it's like, well, yeah, it went from 375 to 275 or whatever. I'm like, that's a big deal.
That's
like,
huge.
like it doesn't sound 1 point or a full percentage point. But when we put that into some context, 25% drop. So, for example, if you were purchasing a $250,000 house a year ago, 3.75. I'm not even going to get into payments. We're going to talk pure interest paid.
Yep.
If you stayed in that home for the life of the loan, you would have paid $416,000. $416,800, right? And if you went today to buy that same house, you're paying $367,417. That's if I'm doing my math correctly, close to $50,000.
Yeah, more.
Right?
Yeah.
So that is a huge difference. 50 G's saved.
Massive
right?
amount of money.
That's a lot of money. And that transitions right into that monthly payment and a home affordability and all of that. I heard something like if you bought a home, like it was back in 2015 or something for $250, and you were to buy you buy like the same house at $300 today, but your payment would actually be lower.
Isn't that awesome? I know. And those are things we want to talk to you about. We refer to that as the cost of waiting, as we're seeing now with these interest rates that have gone down. We could even talk to you about doing from a 30-year down to a 20 or a 15-year.
Right, you want to talk about saving money.
You want to talk about saving major money.
Well, and that's one of the things when talking about shopping for mortgages. People rate. Okay.
Right. Yep.
Well, you got to get to the rate. How do you get to that best rate? Right? There's a formula to that, and I know we've discussed that on the show. But the formula, there's multiple factors. One, how much are you putting down?
Right.
Okay, that's going to determine what is it. Is it Fannie Mae loan level pricing adjustment matrix?
Yep.
Right. Now, Google that. You'll find the sheet for pricing adjustments to interest rates. Right. And so down payment is one of them.
It's
right?
huge.
Loan to value. What's the term? Like you said, Chet. How long are you going to be in there?
Term drives the rate.
And then what are you doing with closing costs?
Property type.
Right. What's the property type?
There's a lot that goes
a lot
into
of factors that play into it, and you have to do each one of those to then figure out what's the best rate and what's the best loan for you. That's really important. Instead of just asking the rate question right out of the gate, how do you get to the rate? It's almost like, well, it equals 255. Well, how did you get to 255? What was the formula to get to that? Right. So you need to know the equation to know how to best shop for mortgages.
That's a huge point you made up there.
I gotta just wrap this segment up, and we'll be back again in a few minutes and run back through that breakdown again, because I think that's so important. We'll be right back. Okay, so down payment, term, closing costs, credit score. But that is controllable to a certain extent. Closing cost, mortgage insurance, right? That was it.
Yeah.
All right, yeah. Okay. All right, you ready?
Ready.
You're listening to the Twin Cities Real Estate Show on AM 950. If you have any questions for us, give us a call, 651-303-0019. Again, 651-303-0019. Happy to help answer any of your real estate or mortgage questions. It's one of the biggest financial decisions people ever make. And, I've always wanted to do everything that I can to help provide good information. And if we don't touch on something in the show, please feel free to reach out. If you're watching on Facebook, you can always put those questions into the comment box as well. So
hey, Kirk, I got to interrupt you real quick. One thing I like about how you educate your clients is you actually go through the details of what drives certain things. And that's very important for consumers to understand, because it's not always driven by the rate, like we were talking about before the break. There are a lot of factors that go into that interest rate, and if you're working with someone that's just driving you to know what the rate is, that's not the most important thing. Yes, it is. We get it. We're all rate driven, but at the same time, there are things like your credit score, your down payment.
Well, and working like a loan officer that works with you to help get that score adjusted, and this is why we talk about apply early.
Right.
You know, by the way, everything we're talking about, go to brickstwincities.com under publications. We have the Smart Home Buyer book. We have the breakdown of shopping for mortgages, what you need to be asking loan officers, what are the things that you need to be considering to put yourself in the best position.
Mm-hmm.
You know,
and those are free.
They are free books.
Yeah.
Right. We don't even have. I don't think. I think you just go in and gives you right to the PDF. No having to submit information or anything like that.
Name, phone number,
right.
date of birth,
it's
social.
Credit cards. No, it's all there. It's the Smart Home Buyer book. I mean, I think people jump into home buying because it should be a fun process, and it's supposed to be a fun process, but it's not going to be fun unless you know what you're doing, and you want to get yourself all that information so that way when the tough questions come up, or the ones that you may not know the answer to, or the one you may want to know more than what it seems like your agent or your loan officer is telling you, that's what that information is there for, right?
Yep.
Put yourself in a spot where you know the reasons behind what your agents and loan officers are saying. Right. Shopping for mortgages, to get the best rate, you have to have that formula, like we talked about. You want to know how much you're putting down. You want to know what you're doing as far as closing costs. Are you paying them? Are you putting them into the loan? Are you going to do, and the other thing is, and this is another closing cost, which is, are you going to do a single premium option? We'll talk about what that means and how that can save you money potentially. Right. So let's dive in a little bit to the different products now. Okay. So the first one is FHA. Now, I want to dispel this right out of the gate. FHA is not a first-time home buyers program.
A lot of people think that.
It's Federal Housing Administration.
Correct.
Right?
Yep.
That's who is insuring the loan, which then allows for banks to lend with a lower down payment option, and can work better for people that are more in that mid-credit score range. So Correct. You do not... to take advantage of this loan product, you don't need to be a first-time home buyer. So,
correct.
Wipe that one out of there. Anybody can do it. So what are some of the pros and cons? Why wouldn't we, with the low interest rates, take advantage of a 3.5% down? So let's talk about some of the cons.
Let's do it.
Right.
So I think, just to piggyback on what you're saying, I think at one time FHA was looked at as a first-time home buyer program because that 3.5% down was the lowest down payment option.
Right.
And we're going to talk about the conventional down payment options here
that
soon.
Are lower.
Correct. So, FHA, some cons to the FHA loan would be mortgage insurance for the life of the loan. Okay? It is a very good product. It's designed for someone that has maybe a lower credit rating, someone that's just getting started off with credit. FHA is going to allow you to finance down to a 620 credit score and get yourself into a property with 3.5% down. The interest rates are low. The mortgage insurance tends to be a little higher. So that's kind of a con there, is that the mortgage insurance on this type of product is a little bit higher.
Right, and this goes back to the, if you're shopping rate, well, the interest rate is low, so it looks attractive. But if you have this fee out there that doesn't ever come off, that's why rate shopping can be dangerous.
Yep, and the only way to get rid of it is to refinance into that conventional mortgage product. Mm-hmm. So those are things to consider when you're shopping. But, again, it's a good program. There's nothing wrong with it. It's going to help you out if you have that 620 to 680 credit score, and even sometimes in the mid 700s.
Still better than renting.
It is, definitely.
And by the way, I rag on renting, but only to the kind of like the long term, in a sense that if you're going to be here in the Twin Cities and you're going to be here for 3 to 5 years, and this is an option that you have that can get you into it, if you are in that kind of mid-score range, do it.
Jump on it.
It's a way better option than paying somebody else's mortgage, in a sense.
Right. One very important thing to note, guys, is that if you're out shopping for a condo, you are going to want to talk to your loan officer and your agent, your real estate agent, about that property type, because FHA does not always make sense when looking for a condo.
Yes, and it's because condo associations have to go through a special qualification process.
Correct.
Just out of curiosity, I remember you mentioning something that they were looking to possibly do like spot approvals again. Where are things at with that? Any
It's-
updates?
Yep. So we are doing that.
Okay.
I don't run across the FHA product as much as I used to. So I haven't had a lot of opportunity to use it yet.
Okay.
But it is out there, and we're streamlining that process. So that is something that we do offer, and it's something that we want to take advantage of.
Yeah, so basically for those associations that may not have been approved by FHA, this is a way to get into a condo and do that. But again, to your point, is you want to know, because the last thing you want to do is be going down the road of getting approval and shopping, and then you're making offers on places that don't have that approval, and you're not aware of that, because you're going to need to start that process, and you don't want to delay in closing because your agent or you weren't aware that you need to do that. Actually, I want to say funny. It wasn't really funny. It's kind of sad. I watched three places in one association go on the market all about the same time. That association lost its approval.
Oh no!
And so we saw, and had the agent done what they should have of looking up the approval status, they didn't. And the 3 places that were under contract all came back on the market within a week.
They couldn't get financing for it.
We couldn't get, no, exactly.
That's too bad.
So yeah, FHA makes sense in the realm of for somebody who's at a 620 or higher, but there's kind of a cutoff right around 680, right?
Yeah, and that is true, because you can get in that conventional product with that type of credit score, but FHA does cater to the client that needs a little more debt to income.
That is, yes,
Yeah,
yes.
FHA is going to go up to 55% of your gross income for qualifying, when conventional is usually capped between 45 to 50. So you do have a little more buying power with FHA. I don't, and everybody's situation is different. Like we talk about in our home buying seminars, our classes, that, not one loan is the best loan. And really how you determine the best loan for you is to get that process started early.
Well, we got just about 2 minutes left. Let's talk about conventional, and then next week's program, part 2, we're going to get into some of the cool programs, down payment assistance programs that are out there. But yeah, conventional, real quick.
Yeah, conventional, it is your, you have your 3% down option. So this is where you can come in and put 3% down, not 3.5% with FHA. Usually you want to have a little higher credit score with the conventional, 680 or higher. You don't have to put 20% down.
Right, that's still a misconception that I
Yeah.
hear about. Oh, we're not putting 20% down. You don't need to. It's as low as 3%. And
You can put as little as just a little over 6% down and still not have monthly mortgage insurance. That's called
the
single premium upfront mortgage insurance. You can finance that into your loan, or you can pay that cash out of pocket at closing. I want to talk to you guys about that. That is an absolute amazing way to do it.
I think in part 2, maybe we jump in and just chat a little bit more about how that can really increase buying power for somebody.
Absolutely.
Because getting rid of that mortgage insurance out of the gate, oh my goodness, especially for somebody who's like, if you're not necessarily a high income earner, but middle higher income, that you may not qualify for the 3% down, so you're doing a 5% down anyway. Why not just go to the 6.5 and get rid of the mortgage insurance?
Correct.
Right?
Yeah, there's options.
So we'll jump into that when we come back for next week's show. So make sure you tune in for that, and then we'll get into as well those down payment assistance programs. Thank you for tuning in and sticking around. Those on Facebook, we're gonna knock out that second show right about now. Take care. Be safe, everybody. Tune in next week.
Happy holidays.
Okay. Ready to do this?
Yeah,
All right.
absolutely. Let's do it.
Okay, here we go. Are you thinking about buying or selling a house, or just want to know what might be going on with one of your biggest investments? Then come hang out with us for a little while. Hi, I'm Kirk Duckwall, and welcome to the Twin Cities Real Estate Show, sponsored by Bricks Real Estate, Network Title, Eric Bloomstrand and Chad Preby with Bell Bank Mortgage, and James Tolson Country Financial. If you have any questions for us, make sure you give us a call at 651-303-0019. Again, 651-303-0019. And you can check us out online anytime at brickstwincities.com. Also, check out Bricks Real Estate, our YouTube channel, where you can see all of our past shows, great videos, and you can follow us on our Facebook page as well, where you can see upcoming events, watch us record live there. I'm going to go into the website just real quick because we last week we're talking about mortgage shopping and types. There's a lot of great information that on our website you can download the Smart Home Buyer Guide, and it's free. You go on there, brickstwincities.com, under publications. You can download that. We also have the Smart Seller Guide there as well. A lot of great information, and it goes much more in depth about some of these mortgage shopping tips that we're talking about and how to make you an educated consumer as you're going out looking for these things and not just being a rate shopper. And we talked about the dangers of that. You got to get to that formula, or know that formula to get to that rate. So we left off last week talking about conventional loans and mortgage insurance buyout, as what's called a single premium.
Correct.
And one of the things that I see right now as how it can be an asset, maybe it doesn't always come down to the, oh, well, my break-even point at doing that is going to be, 4 years or 3.5 years, and it's only $80 a month or whatever. Well, $80 a month, I think if I'm doing my math correctly, does that work out to be, you're talking 1,000, is that about what, adding another 10,000 in buying power or so?
Yeah.
Something like that?
About that, depending on,
Yeah.
taxes and insurance.
Right.
But
So it can maybe get you to a spot where it can get you into a house that maybe you had your heart set on, or an area that you're really hoping to get into, that mortgage insurance buyout is a good option there, right?
Boy, that's a good point.
For some people, it is dollars and cents. I mean, if your mortgage insurance is costing you $160 a month,
right,
that's a big chunk of change.
Yeah. This is an amazing opportunity for people, and I want to weigh it out for you. But usually, you want to have that 740 credit score. You're really going to see that lower premium for the cost of that single premium option. But you don't need to have a 740.
Okay, I'm not very good at doing math on the fly, but
Okay.
it works out. $80 a month works out to $16,000.
That's huge.
In buying power increase if you go that route. Again, you don't want to put yourself in a house poor position, but if it gets you something that you were looking for, it's an option to do
Well,
that.
and it keeps you competitive in a competitive market too.
Right. And so, again, to recap, this is for conventional loans that you can do what's called a single premium buyout to get rid of your mortgage insurance, so you're not paying that for 4 to 6 whatever years before it might fall off. Right, exactly.
Correct. And you can do that as little as just a little over 6% down. Your sweet spot's going to be 10-15% down. You're going to see a lower premium on that cost. But
well, let's talk about some of the other loan programs, because we talked about FHA last week, conventional last week. Let's get into MHFA.
Yeah.
Minnesota Housing Finance Agency, correct?
Yes, this is a good one and you don't even have to be a first-time home buyer. This product allows you to purchase a home with as little as $1,000 out of pocket.
Yeah. I mean, $1,000.
Literally.
Right.
You're
that's your security deposit at your apartment.
Yeah, exactly.
That's your down payment.
Right. So basically your earnest money deposit is going to cover that minimum requirement for MHFA. Now, there's income limits with these programs, so you're going to want to talk to your lender about, your gross annual income, household income. So you, your wife, if you have children that are there, they're going on household income. So this can be a little tricky. You want to work with a reputable lender that is going to calculate your income correctly, because this can turn into a nightmare for you if they're not doing the calculations correctly up front. But This is an amazing opportunity. You have two programs. You have the deferred payment option up to $10,000 in assistance, and then you have the monthly payment option up to $15,000 in assistance. And now we have that LIFT program that is available.
Let's touch on that. So
Yeah.
what is the LIFT program, and how does it work?
Yeah, the LIFT program is a true grant, and it's a 5-year, basically, so it's $15,000. You have to buy within the city limit of St. Paul, Minneapolis, okay? And it's, again, it's a grant. So every year up to year 5, a portion of that $15,000 is falling off. One thing to consider is you do not want to refinance or sell that home or transfer title within that first 5 years, because that $15,000 or whatever you have remaining on that balance is going to become full or due in full.
Right.
Okay.
And we talked about that in the last show. You know, if you're renting and you're thinking you're going to be here 3 to 5 years, well, 5 years for this program. Look at that, $15,000 in money
Free
to go
money.
buy a house, right? That you couldn't ask. Now, can you compound that with an MHFA, or no? It's on
something
its own?
you cannot do, but it does go with your, so you have your traditional first mortgage, conventional, or FHA, which would piggyback off of that.
Okay.
Now, one thing to consider is you do have to do an
Does it
8-hour.
count? Does it count as your down payment?
You can use it for down payment, closing costs.
Okay, so if you did a 3.5% FHA loan, 15 Gs.
Can you be used all for your down payment
That's
if you'd
amazing.
like to, and then you
Wow.
can ask the seller to pay closing costs or finance those closing costs in.
Yep.
So one thing to remember is you have to do an 8-hour class. Don't want to scare you guys away from this, but this is a requirement for the LIFT program, is that 8-hour class to get these funds. But awesome opportunities, guys, for down payment assistance.
So basically, you're earning $1,875 per hour to sit through that class.
Pretty good money. Yeah, someone's making some money.
Yeah.
No, but I mean, it's worth your 8 hours. Trust me.
Yes.
This is $15,000 that can get you into the house. I mean, ultimately, that's a healthy down payment.
So MHFA $1,000 down, FHA or conventional, you got the LIFT program. There's $15,000 down. Granted, a little more restrictive as to where you can go. So Minneapolis, St. Paul there.
Yep.
Now this one's a little more specialty, but the VA loans for veterans out there. I mean, I can tell you as a veteran myself that very, very rare have I ever seen a case that it makes sense not to use a VA loan. I mean,
very rare.
It's zero down.
Zero
with
down,
no
no
mortgage
insurance.
insurance.
My gosh,
Right?
it's amazing. And the rates are absolutely amazing. So if you are a veteran out there, we want to talk to you about the VA loan program, and we have some benefits that go along with the VA loan program.
Yeah, and a lot of people don't know. You better be, if you've served and you're curious at all. Because some people, I didn't serve 20 years. That doesn't matter.
That doesn't.
I mean, I was in for 7, and then one off, so total 8. So
Okay.
And I know people, I think 3-year commitments and stuff, right? So you really want to check, right?
You want to check, yeah. And, if you're active duty, there's ways around that funding fee with certain types of disability income pay through the VA. And, again, just zero down, no PMI with absolutely amazing rates. If you're a veteran, we want to talk to you about it. Absolutely.
Now, here's another good program, another zero down option. And as the Twin Cities is expanding, it doesn't feel like you're getting that far out anymore, which is rural development.
Yeah,
right?
Just outside the city limits, you can do a zero down loan. Again, amazing interest rate. And, gosh, I mean, you can go up to North Branch or even just down out of Northfield and utilize
Yeah, well, I
these.
think where I'm moving falls Newmarket Township.
Yeah, you're right
Right.
there on the border.
Mm-hmm. So you don't really necessarily have to go that far out. Yeah, it's just a little bit north of Forest Lake.
Yeah.
Little bit northwest of Anoka and places like that.
Correct.
Going south, it's just south of Lakeville. You
Yep,
know.
absolutely. It's a government-driven program, so we want to talk to you up front about it and get you pre-qualified or pre-approved so you don't run into any snags, because there are some qualifying factors with these types of programs that we want to talk to you about.
Yeah. Yep.
just kind of like your interest rate. When someone calls me and asks me what my interest rate is, I ask them if they have 5 minutes because I want to ask them questions about what they're doing.
I like the what's your interest rate? What do you want it to be? Because
Right.
you can make it what you want depending on what you want to pay and what program you want to use, right?
Yeah.
All right. Well, we're going to take a quick commercial break. When we come back, I want to just briefly touch on portfolio loan options and get into where the market's going. We're going to take a break. We'll be right back. All right, ready?
Yes, sir.
Just double check. You're listening to the Twin Cities Real Estate Show on AM 950. If you have any questions for us, give us a call, 651-303-0019. Again, 651-303-0019. My mind went right to the
tongue
end.
twister, yeah.
Rattling that off. Happy to help answer any of your real estate questions or mortgage questions. So we just went over MHFA, down payment assistance loans, VA, rural development last week. If you didn't catch last week's show, go back and listen. You can do that through, I believe, AM 950's website, where you can pull up all the podcasts. Also, we have on our Facebook page and YouTube channel as well. So that's, just look up Bricks Real Estate to find those. But we were talking about, conventional and FHA and some tips as to how to shop for mortgages. Kind of the last one I want to touch on before we get into what we're seeing the market doing here this December is portfolio loans. Now, this one is kind of interesting, right, for maybe somebody who's self-employed, right?
Yeah, this is an amazing opportunity. It's for someone that doesn't fit the requirements for your traditional conventional types of loan programs. A big one that we offer at Bell is going to be for your, if you're a doctor or a dentist, or if you're just getting started, you're out of college, and you want to buy a house. You're going to have a career that you're going to make a good income at, but you're just not making that income now. We have a program for you if you're coming out of school to be in the health field, the doctor. So another, like you mentioned, Kirk, if you're self-employed, if you have a good credit score but you have compensating factors.
Right. So I had somebody who had a ton of equity in their house. Right, they made a decent income, but just the income without the equity from the other house it didn't work, right? So we did a portfolio to get it done. Right?
Yep, and the bank's looking at the risk level of these loans. So, with the company I work for, Bell Bank Mortgage, we do have a portfolio team, and they're basically, it's like
underwriting division.
Yeah, thank you. Yes. Like a board of directors, let's say. Just imagine that, 3 or 4 people, analyzing these scenarios, and they make a decision.
Right. It's not an algorithm. It's people
Correct.
looking at it. Right.
Correct.
Doesn't make sense. And it's not. And they're not high interest rates either. It's not like to do this is about 5%.
Correct. Yeah. No. Interest rates are amazing. One thing too is if you have a lot of assets, if you're self-employed, or even if you're retired, let's say, but you're living on your assets, your 401k, the money that you've earned over your career. These are types of programs that we want to talk to you about. They don't fit your traditional financing programs, but we do have a spot for you in our portfolio type of products.
Right. Yeah. So that can make a huge difference. So kind of just to recap, finding the right loan. Over the 2 weeks we've talked about FHA, conventional, MHFA, which has conventional and FHA options. We've talked about the LIFT program, VA, rural development, and portfolio. There's a lot of things to think about, right, when you're going out there shopping for a mortgage. And then once you have all that, it goes back to, what's the down payment? What are you doing for handling how closing costs are working? What type of property are you buying? All of that comes into play to help find the best program at the best price.
Right.
That's the key. Best program, best price for you.
Exactly.
Right? That works, right? And sometimes it's not just about payment. Like if you want to save real money, shortening up that term, like we talked about, is huge.
Exactly. Well, the big thing too, Kirk, real quick, is that you have to know your loan program. You have to know your down payment. You want to know your interest rate. You want to know the type of property you're purchasing, because when you're out with your agent looking at properties, and you find the one that you love and you want to make an offer, that's part of your purchase agreement. But the beauty behind that, if you're doing your homework up front, you can make an offer with full confidence. You're not wondering, gosh, I wonder what the payment is, or, geez, I don't know, we might not qualify for this one. You know what I mean? Those uncertainties are not okay.
No, you don't want that right then.
Yeah,
right?
No. So do your homework up front, guys.
Be careful of clickbait lenders, and I could go on for a while. Maybe we'll hit on that in the after show.
Yeah.
But let's talk about where the market is going. So rates look to be stabilizing.
They are.
Over the last few weeks.
We had a little bit of an uptick in the market due to the vaccine announcement.
Yeah, it bumped up and then dropped back. So 2.71 is what I'm seeing through Freddie Mac right now, and it's been stable. Looks like 3 weeks running in that mark roughly.
Yeah.
So I know you gave some information for our Market Monday video that we put out. Like if you're closing in 30 days or less, lock now. Otherwise, float it.
Correct.
Right. So.
Yeah, and ultimately that comes down to who you are. I mean, some people, they know, hey, if my rate's 2.75, I know what that is. I've never seen a rate this low in my life. They want to lock it in. Mm-hmm. I'm kind of that type of person.
I'm kind of waiting for the go ahead to lock mine on the place I'm buying.
There still is a lot of uncertainty out there, right?
Yeah, I mean,
new president, we have coronavirus, we got a lot of things going on right now that we're uncertain about.
So, the market's moving along. So I do the market meter. We've talked about that in the past. The market meter's been ticking up. It's been moving up. Election time, we were down at about mid 5.5-ish, and now it's up to 6.5. So that's into the seller's market territory again, right? So stable market back into seller's market. That has been moving up week after week, and a lot of it's due to these really low interest rates and the pressure on the market. If we look at new listings, so we've had some good news on that. It's been new listings are up over the same time last year. Most weeks over the course of the last 8, there was one that was down, and that was November 14th. But yeah, most weeks have been running ahead. The problem is when we look at pending sales, they're almost double the new listings.
Yeah.
Right? So we can't make any ground on inventory. So inventory is just down 34% when I last checked it out. Yeah, wow. 34%. I mean, that's huge. Now, I hope that we see some relief as vaccine comes out, as people's comfort level with maybe putting their homes on the market increases. I mean, when we look at what sale prices have done this year, what did you say, up at 30
some percent?
No, $30,000 $30,000.
Oh,
$30,000 average sale price increase in the Twin Cities.
That's crazy.
For a year over year. So I mean, there's going to be some sellers that look at that and go, yeah, I want to take advantage of that.
Absolutely.
And I think when they see the numbers and see how things are going with the vaccines, that we'll see a market that recovers. Interesting thing I want to point out is days on market, because this one gets thrown a lot, and you really want to know what is real out there. So days on market down 23.9% over the same time last year at 35. That's the average. Now keep in mind that's all sale price points. So make sure that for if you're selling something, to have the appropriate expectation of days on market. A great resource for that is Minneapolis Association of Realtors has a ton of good data on days on market for different areas, different price points. That's where I'm printing off all this.
A lot of real estate professionals base their numbers on that, right? As far as marketing, the days on market.
Yeah,
Possibly,
yeah.
you know,
Yeah,
I
I
saw-
thought you were going to say there's a lot of real estate professionals that look at those stats on that site, and some real estate professionals.
Right, some, yeah. Probably the ones you want to hire.
Yes. Median sale price. So it was at $315K. It's been jumping up and down. So if we go back to August, it was $315 down to $310 in September, back up to $315 in October, and then for November back down to $310. So
Okay.
it's kind of a little bit of a roller coaster. But yeah, in the last minute of the show here, I think, you know, we're going to stay in that seller's market territory. We're not going to have a winter market.
Yeah.
It's going to be non-existent this year,
Right.
and it's because of interest rates as low as they are, and because of inventory being as low as it is. It's just the buyers that sat back during the summer and said, "Oh, I'm going to wait till the winter market. It's too hot." Yeah, I'm sorry.
You're not going to see much of a
You're not going to see much of a difference. So the key is when you're out there shopping, don't look for the shiny ones online. Look for the ones with the bad photos, maybe. Look for the ones that have been on the market for a few days. That's where you can find the good buys.
Yes.
That's where you're not paying the ridiculous price necessarily. So, you know, those are the deals to be found out there.
Pictures tell 1,000 lies.
They do. They absolutely do. Well, we'll be back again next week. Take care. Be safe. All right, Facebook.
Good stuff.
Good stuff.
There was two products I didn't hit on that I wanted to talk about real quick. Can I do that to our Facebook listeners? These are two big ones, actually. We have Home Ready and Home Possible.
Okay.
They're not first-time home buyer programs, but they're based under the conventional programs. Home Ready is Fannie Mae. Home Possible is Freddie Mac. These programs will allow you to put 3% down and have a reduced mortgage insurance premium and interest rate. The only side here is that you have to fit within a certain income bucket. So it's 80% of the median income, which is right just below $80,000. So if you're that type of person with that income,
You're that type of person.
Sorry, that probably didn't sound exactly right. But if that's you, let's talk. I can get you a really good interest rate. Again, discounted mortgage insurance and 3% down. It's amazing.
Yeah, and then the other thing we touched on, which is the clickbait. Be careful out there. There's oh my gosh, the shadiness of some of these online lenders. We actually had an online lender approach an agent of ours offering some sort of deal if they become a loan officer too.
What?
Yep, dead serious. Like
Wow.
so they would do their own loans as well as be the agent.
Oh.
That's just screams liability.
Okay, my gosh. Buyer beware.
Yeah,
Yeah.
exactly. So, you know, be careful. Be
Yeah.
careful of the clickbait. They're out there to make money any way they can, and not necessarily look out for the consumers, right? And we want people that as they're shopping, to have the best people helping them throughout the process, not somebody that's just looking to make a quick buck. So,
Yeah,
you know,
point.
good local, you know, where you can go in and talk to your loan officer. You know, I think that's well, of course, COVID days.
Well, we can do a Zoom call. We can do a Zoom call. I think everybody knows how to do Zoom now, right?
Yeah, exactly.
No, but you know the phones, our smartphones are great, but not great for getting your mortgage approval. There really is no instant approval.
No,
when coming to a mortgage.
It's a lot of BS when they're like, "Oh yeah, you're qualified." Well, did you submit anything?
Right.
Did you actually prove your income? You
Right.
know, no, you're not qualified, and no, you're not ready to go out shopping.
Right. There's a huge mortgage company out there, national lender, that markets that all the time.
Mm-hmm.
As we can get you an instant result on, you know, click of a button on your smartphone.
Hey, for SpaceX fans out there,
Yeah.
that company, well, rockets.
Yeah.
You saw what happened to the landing of that rocket.
Yeah.
And
Wow.
no bashing SpaceX. I thought it was a great flight.
Absolutely.
But if you want to see what would happen with your mortgage, if you use a mortgage company with maybe a similar name, that landing is a prime example.
Yeah. Yeah. Well, you're going to want to work with that's awesome. You're going to want to work with a reputable lender that's going to ask for your pay stubs, your W-2s, most likely your tax returns. They're going to want to look at your bank statements. They're going to want to pre-approve you. So when you're out shopping, you are exactly what it means. You're approved.
We should do up a commercial. do you want your mortgage to end like this? Your pre-approval.
Oh my gosh.
Oh, all right, Facebook. We're just probably
it's
gonna
good
call it a
times.
show. All right. Have a great week. We'll be back.
Happy holidays, everybody.